Welcome back to the channel. Today's video is very special. It is an interview with Phillip J Anderson, the author and legendary economist of this particular book here, The Secret Life of Real Estate and Banking. I will leave a link to all of this stuff in the video description, and you will hear us talk a lot about different memberships and paid things. And I know that can be a little annoying for some people, but I'm doing my absolute best to give you as much as we can here on the channel for free, and of course respect the work that Phil has been doing in the markets for over 30 years. Now, he's been discussing this in the public forum for over 20 years, and some can even find stuff way back 25, nearly 30 years. He's been talking about this 18.6-year cycle after he discovered it through the works of Gann, and we do discuss these sorts of books here. So some people might be looking for extra material. This sort of stuff is what we are referencing here, W.D Gann. This stuff is over 100 years old and still rings very true to the market today. And so with that in mind, with all of the information that's out there, it does get a little bit wearing for Phil to discuss the same thing over and over again. So in this video, we go through a little bit more of a general discussion about governments, the policies that continue to pop up every single cycle, almost to clockwork at the same times, which is why he's so confident that this is not the depression in 2022 that every other social media influencer, even respected investors and economists out there online are talking about. Very, very confident. And there's also many, many calls from Phil looking back, say 10 years and discussing these sorts of turns in the market 10 years in advance, 20 years in advance. Now, it almost seems too good to be true, and it's a crystal ball that no one else has. But honestly, all of the signals and the information is entirely out there for free, or if it's not for free, it's basically a book or a textbook that you can purchase. Anyone can purchase. If you have a computer and you're watching this, you have the money to buy books. And so Phil is very much a very big advocate of getting off social media, getting off YouTube, because it is filled with a ton of noise and garbage from even people who we think know what they're talking about, even the billionaires out there, as you'll see in the interview today. And so the other books that he does reference here, before I get into the interview, are things like Fred Harrison. Look at Fred Harrison, W.D Gann. Phil's book is amazing, and then other things like this go really into the cycle. Neil Howe and William Strauss, the fourth turning as well. With all of that in mind, I hope you can understand where we're coming from when we get into today's interview. It can sound a little abrupt. Phil is a little bit grumpy at times, as you may have experienced from other interviews that I have posted on the channel. But it is all meant with a heart of sincerity to help as many people as possible and just show that the answers are out there. You don't have to listen to me. You don't have to listen to Phil, but he's directing you in a direction to understand where some of this information has come from, and it has been out there before the internet. And if we can understand that, then we can piece it together so that we're not fearful every time we hear and see things from the media, economic collapses, wars, all this sort of stuff. It's just about understanding the cycle and where we are in the cycle, and the fact that the cycle has not changed for hundreds of years, regardless of what has been going on in the day-to-day events of the government, the army, and the likes of those sort of organizations. Some of the resources that I'll leave in the video description that you can watch at the end of this video to get a broader understanding of what's going on out there are these two interviews that I did with Phil this year before some of the major events like the war in Ukraine had begun. This is the sort of stuff that we're looking at that point in time. And I also found a video back in the old catalog here, back from 2018, Phil specifically talking about a downturn after 2019, which of course we now know as C19. And this is put out to all of his members. This is something as part of his subscription service. So I've left a link to that in the video description as well. So this is absolutely incredible to see this sort of stuff years in advance and then look back on it and think, damn, this is what he was talking about. And the other last resource that I'll put down there is the video, the recording live event that Phil and I did on the Gold Coast in April of 2022. This will be down there. You guys can purchase it. It's 3 hours of content going over the cycle and understanding land values and also how the business cycle works. And finally, as a reference point, we are currently in this stage of the cycle. So this little up and down zigzaggy part, this is where we're about to head. We're in this last stage of the 18.6 year cycle for the bull market, the last part of the 14 years before we get the 4 years down. And the end of the cycle is the winner's curse stage. That is the scary part, just like the greed at the top of the Bitcoin market, if you're familiar with that back in 2021. That is what will happen with the rest of the economy, most notably probably the land. That is where things will get crazy. The market collapses after that point, and everyone goes absolutely berserk, blaming governments, and that's where the overreaching of centralized government happens yet again. It has happened time and time and time again, as you can see on this particular chart, and you can also reference that from the website. So as you get into today's interview, I'm sure you can understand now why I had to put a bit of a preface into the beginning of the video. We do speak about stuff that we've talked about in previous videos, but don't go into as much detail on it, especially with the likes of the 18.6 year cycle. We don't need to explain that in every single video, but I will leave a link to those at the end of this video so you can go and reference those for yourself as well to build upon your own knowledge and hopefully make the most out of this next bull market coming up for real estate, for stocks. Anything is about to go up over this next few years before we will hit a major crash. A major economic problem will eventuate sometime after 2026. And yes, probably something to do with war. It'll be a big economic downturn. This is what happens at the end of every 18.6 to 20 year cycle. It's also noted here in the fourth turning as well. It comes together every sort of 80 to 90 years. So throw 4 of those cycles in. All this stuff is leading towards something major, but it is not now. And that's the stuff that is basically throwing a lot of people off the timing of the overall cycle. And now, unfortunately, I think we'll miss a lot of the gains, get caught up at the top of the market, as always happens, and then we get the collapse and everyone is then shouting at the government that it was the government's fault, and this is how these sorts of things unfold. So, without further ado, let's get into the interview. Welcome back, guys. Today's video is an exclusive interview with Phil Anderson, the creator of the 18.6 year cycle. We're going to dive into more questions about that in today's video. I've left all of Phil's links in the video description if you guys want to go through and have a look at Property Sharemarket Economics, which we'll talk about in today's interview. Also, the author of The Secret Life of Real Estate and Banking, link will be in the description as well. That stuff has a plethora of content and information about this cycle. And I just want to say thank you to Phil for joining us late time over in the UK. I think it's 8 or 8:30 p.m. 6 a.m. over here in Australia.
Hi, Jason. I'm grumpy and tired. Never mind.
Pretty tired. That's not how we start the intro. Grumpy and tired. That sounds a bit more like Phil. You guys should know. You guys would know from the last interview. So today's interview, we wanted to do an update as we approach somewhere around the lows of the market. That's what we wanted to talk about because people are really fearful about everything going on out there, and everything is basically.
Jason, I told you we get a low in the first week of October, and here we are. Here we are. Told you that last time.
He did tell us. Phil did say that last time, and here we are at a low. We'll have to see in the next few weeks.
Yeah,
but Phil's pretty certain about that low coming in. And it's a lot of people say that you can't time the market, that sort of stuff. It's just a matter of going back and looking at history, and I think that's where the frustration is coming from at the moment, with the amount of news and noise saying everything's about to collapse. And you keep telling me,
Jason, before we go anywhere, viewers, listeners have to realize that the reason they don't or can't understand what's going on is because the very thing that you have to understand, which is the land market, the economic rent, it has been deliberately written out of economics. Okay, so if you wish to follow that up, you just read the book by Fred Harrison and Mason Gaffney called The Corruption of Economics. Okay, people get into all these ridiculous, effing stupid conspiracy theories, like all the stuff that Trump and QAnon and all that espouse. It is utter shit. Okay, it's crap. Those conspiracy theories, they're just not real. They're done. I think I feel sure they're deliberately espoused to keep people idiotic and in the dark. If you genuinely want to,
one step back from
understand
that. Go
something,
on, Phil.
if you just genuinely want to understand something, understand that not the theories, but the stuff you need to understand about economic rent's been deliberately written out of economics. Okay, it's as simple as that. And if you want to understand how to forecast, you have to understand how the economic rent capitalizes into a price, and then it's traded. It's mortgaged by banks, and we all buy and sell it. Okay. That's the real estate cycle.
AKA the land, in case people are wondering. Land, condos, units, apartments are all a tiny piece of land, or if you have your own house. And so just to squash all of the conspiracy theories, BS right now, that's all to the side. I think a lot of the big questions that people are wondering are the stuff that just keeps getting blown up. And even the smartest people, I've interviewed heaps of people on this channel now, and they all are across the same thing. And if I try to bring up property and stock market and economics, they don't have any clue. They don't marry the two together to understand the cycle.
That's correct.
And so
that's correct.
The questions that keep coming up are, well, inflation has to go higher. That's going to crush everyone. The latest topics are about the Eurozone. UK retirement funds are showing signs of insolvency. Like, I'm sure you get really sick of hearing all this over and over
Jason,
again
after talking
about it for the last
simple.
30 years. Yeah.
It's really simple. There's two things you have to understand. Well, three if you want it. We've included about the economic rent. You have to get to the bottom of that first. The second thing is that because the economic rent of land is enclosed and traded as a price, we therefore must get a real estate cycle. The only question you have to ask after that is why it's so consistent at 18, 19 years, 18.6 really. So if you're prepared to accept that real estate, because the economic rent is enclosed, we must get a cycle, then you just simply have to start looking at some history. And the last time that you have a look at, since 1955, the last 11 times that the Fed, you have to watch the US because they lead. The last 11 times since 1955 that the United States, the Fed, has lifted or raised interest rates, 10 of those times, house prices continued to go up. Okay, so what you have to work out after that is you look back in history those 11 times and you work out, you overlay that history with your knowledge of the real estate cycle. And then you work out what part of the real estate cycle we are in. So the last time interest rates went up a bit like this was 2002, right? And the time before that was 1994. So you just work out where you are. If you're at the beginning of the real estate cycle, you don't have to worry about it so much. We're now in the second half of the cycle. It's quite normal that interest rates get lifted at some point because they were lowered during the prior recession. So you just got to understand that when the Fed is in accommodative mode, asset prices go up. When the Fed is in restrictive mode, asset prices have a pause. And the only time you really have to worry about the Fed and what they're doing is at the extreme end of the real estate cycle, which is after 14 years of property prices rising. When you get to the extreme like that, after 14 years up, which we will be after 2026, then you can panic. But at the moment, it's just completely normal. So that's your real estate cycle stuff that you need to understand. You then have a little bit of history, and then you can overlay the stuff that W.D Gann, Gann, discovered about stock markets. And the easiest thing to follow on Gann is that Gann rediscovered what's called a decade cycle. So if you start the decade cycle from years 1 and go through to 0, so this time we're looking at 2021, 22, right up to 2029, then 2030. This decade. Every single year ended in 2 has been a down year. Every single one. 2012, 2002, 1992, 1982, 1972, 1962, 1952, 1942, 1932, 1922. They were all tough years. It's just the decade cycle. It's the way that it works. And every single year ended in 2 has been a down year. Some are worse than others. But at the beginning of 2022, Property Sharemarket Economics, I always put out, myself and Akil, we put out what we call our roadmap, which tells people what we think is going to happen for the following 12 months. And in 2022, we were coming up for the 7-year cycle, and we're coming up for the 36-year cycle. It's just so bloody simple. So you go back and have a look at 7 years back. You go back and have a look at 2015. You go back to 2008, 2001, 1994, 1987. Every 7th year in the stock market, it's called the Schmitter because it's in the Torah. Every 7th year is a tough year. It's just like that. And so the next year that will get really tough will be 2029. But you have to fit that within your cycles knowledge of 18.6 and the decade cycle, and understand that the actual shape and pattern's a little bit different, but the years end up being the same. I just don't understand why people don't get this and why it just isn't. Well, no, I do get it, because the Fed, the government, they're deliberately trying to keep you dumb. Right, so all you people listening, it's quite deliberate that they make you dumb, right? So if you really want to try and understand stuff, you have to do your own research. Okay, don't start doing research in normal economic textbooks, because you're just not going to get it. You have to start doing a little bit of history and digging up on your own, right?
Well, I guess that's what people are trying to do when they come to the internet now, so you can find other things. So it's nice to have another resource to be able to go and think elsewhere.
No.
No?
The internet,
Okay.
The internet's a crap tool. Seriously, it's a crap tool. If anything wasn't understood pre-internet, then it's not going to go post-internet. So the stuff that we've been doing,
more from a media point of view, people can go and find. Well, they're listening to us now, so hopefully that's not a whole lot of crap.
Jason, honest.
Yes,
Jason. We are more, the community in society now is more dumb than it's ever been. And yet here we are, supposedly have the resources of the internet, right? All the internet is doing is it's like an echo chamber. It's augmenting what people choose to believe. It's making us absolutely sick. It's making society dumber. It's not making us smarter. Okay, so in my humble opinion, I think you want to get off the internet, and I think you want to go back into a library, and I think you want to search out some genuine historical information that was put down and actually written in books by people who lived through it. And the first place you start, if you just generally get some serious information, the first place you'd start is probably Fred Harrison, or you'd go back and have a look at Roy Wenslick, or you'd go back and have a look at a little bit of the original Gann, right, who simply showed you how you look at history and how you interpret it. But if you're gonna go on the internet, then start treating the internet as looking for what you're looking for. I mean, we know that if you type in certain stuff based on your browsing history, Google especially is going to bring up for you stuff it thinks you want to know, right? And we know if two people on two different computers put in the same information for the same search stuff, they're going to get different results, right? We know all that. So the internet's just not going to make you smarter. Yes, it can be a tool if you sort of know sometimes how to use it, but if it wasn't known before the internet, it's not going to be known after the internet, because what goes up on the internet is what everybody thinks they know, right? So
I just see it as the echo chamber, and I understand what you're saying. Definitely, there is a whole lot of crap out there. I'm trying to just put one extra piece that isn't crap so people can actually go and find these resources, because if you haven't mentioned Fred Harrison, Gann, those sort of things, I wouldn't have found Fred Harrison. I found Gann, over a decade ago, and that wasn't from the internet. It was from an old family friend. He was probably 60 at the time, so he knew about Gann. And then we learned from that point. So we're trying to do that and help other people find these other resources, rather than go back to the internet, to all of the same big talking heads saying the same crap about the economy, everyone getting dumber. They just think about the interest rates going up, US house prices falling, UK retirement funds, like the same news headlines, and everyone's trying to piece this into their own cycle, and everyone says the same thing. And then they miss what's going on. And I guess that's what you got to do.
What we got to come to is what people, if you're listening and following right now, the economy has a structure. It's based on the enclosure of the rent of land. That structure, the powers that be, the people that run the government, sit in the House of Lords, the US military, they do not want you to be smart. They do not want you to understand this. Okay, and if you go back and have a look at the Corruption of Economics, the excellent book written by Fred Harrison and Mason Gaffney, they tell you how the information about the land and the rent was deliberately written out of the economic textbooks. And this is why nobody knows about it. That's why we continue to be so dumb. And it's just why we're just not going to hear it. It's why economists can't understand that when interest rates get lifted, it's exceedingly unlikely that house prices are going to crash, because it's all based on the rent, right? Based on earnings. It comes back to earnings.
Mm-hmm. We went through that in a lot of detail in our live event that we did here on the Gold Coast. You did that whole thing. I'll put a link for that as well, so that you don't have to. It was amazing. So you don't have to go through the 3 hours of explaining it all again. Link will be in the description to do that. But for
put the
today,
link up. People should. It's cheap information. People should go and watch that.
Totally. A $70 book, $100 this, that. It's the best thing that I've ever spent my cash on, and it's made me a lot of money and saved me a lot of headache and time, which is what
me too.
You're trying to say when it comes to just understanding one simple thing. Economic rent is enclosed. That is 100% going to continue the cycle regardless of any other news headline that comes up. And I went ahead and just made a list of things that have happened since we talked. China Evergrande bankrupt, that collapse that was talking about in September, that was supposed to end the world. Russia invading Ukraine in February. The list goes on. COVID-19 global pandemic was supposed to end the world. The latest ones are coming up are Credit Suisse. Is that going to affect anything? I imagine your answer is no.
Well, go back and have a look what happened in 2002, 20 years ago, which is the last time we were in this second half of the cycle. The American military were again attempting to foster discontent. We all thought that World War III was coming because we didn't know what the American military were going to do in Iraq and possibly Iran and also Afghanistan. I mean, they're talking about the same thing. It's just different generals, different president, but it's the same pressure that was going on. We all thought World War III was coming. We were again in 2002. We were talking about the collapse of Enron. There was another World.com, was it? I forget now what it was. But the Nasdaq had collapsed by 77 something percent. It was down way off its lows in 2002. The bottom came out in October of 2002, right? Nobody thought that stock market, the Nasdaq, nobody thought they'd ever recover. We'd had companies like Pets.com and other things that people had put all their money into and then lost the whole lot because it wasn't sustainable. We're all talking back then about exactly the same friggin' thing. You go back and have a look at 1982. 1982, interest rates were at 16%, right? Get that, 16%. Mortgages, I bought my first house just before then. I was paying 17%. All right, inflation was at 12%, 13%, something right. House prices went up; they didn't go down. So, we're talking about exactly the same thing. You go back to 1962, which was then getting into the second half of the real estate cycle. Back then, we just had a very big credit crisis, and in 1962, in October, people thought the world was going to end because Khrushchev had put nukes in Cuba. And so US again didn't know what was going on. So everybody was worried, they practicing gas masks and sitting under the tables in the schools and stuff and everything else, right? We thought the world was going to win. 1942, the Germans were blitzkrieging and starting bombing in London. It was very, it looked at that particular point, early 1942, the Japanese had bombed Pearl Harbor. They caught the Americans by surprise. It looked like the Axis powers were really on the march. People thought that the West was going to collapse, right? So it got really difficult. Years ended in two. It's absolutely exactly the same now. I see the same processes, and again, nothing changes, right? Nothing changes. The pharmaceutical companies are stronger now than ever. They're trying to keep us unhealthy. The banks are trying to keep us deliberately in debt. The world powers, American military, and they're always looking for an imaginary enemy. That's to keep us in fear. And the government exists so that all those three things can be done legally because it's government backed, right? You got to go beyond it. You go beyond it by studying history. When you study history, it gets very depressing because you see absolutely nothing's changed. Not a thing. Nothing. We're still arguing and talking about the same stuff. And the internet, it's made things even worse because it's just augmenting all of our fears and people looking for all these absolutely stupid conspiracy theories. Absolute nonsense, right? It just don't go. It's just a rabbit hole. Don't go down there.
No, not at all. I just want to go back to 1982. I agree with all of what you're saying. It's what we've come to expect, at least with our members, and I'm sure your members say the same thing. It's the same nonsense over and over again, but we're trying to see through the nonsense, and hopefully a few more people join and understand that it is the same thing repeating. And yes, if they can help themselves out financially.
Once you see that, it can give you enormous peace of mind. You just see the repeats, and then you know how to take advantage of it all. You know what to do at the right time.
And how did 1982...
Right? So on the streets at the moment, you buy in.
Yeah, I'm hearing multi-year bear markets from a lot of respected I guess traders or investors, multi-year bear markets from now. And I'm like, I don't understand why they're not seeing it. But 1982, high inflation rates, high interest rates, prices still went up. How does that happen this time? People, the question always comes back to, well, how is that going to happen this time? I can't see how, people are thinking interest rates are going to go 8% to...
It's not based on price. It's based on affordability. So from here, history never happens exactly. There's always little oddments and little things that are slightly different. It's got to come back to affordability. Houses have never been affordable. They've always been difficult to buy. So to make, as we go forward from here, they'll have to be made that little bit more affordable. So, you can see in England, it's been a classic example, or in the UK, as the Bank of England has put interest rates up, the new Tory government comes up with three new things to try and make the mortgage more affordable. So they alter and adjust all the stamp duty. They tried to eliminate taxes on the top tiers, right, which wasn't very popular. And they tried a couple of other things, one or two which will go through, the abolition of inheritance tax and all and other stuff, which is attempting to make the house purchase more affordable for the middle-aged, the middle of the road, Jane and Tom over here. So, the Bank of England is trying to make things a little bit less affordable and put interest rates up to get us back into normality. And the government is trying to make it more affordable. So you'll see that as we go around. Governments, we'll probably get a mortgage that's 50 years instead of the 30 or something, so that whatever they can do to bring down the average monthly mortgage payment to make it more affordable, which will happen. And it just drives us into the 14 years up. That's all I know.
All right. So interest rates can keep going up, but the main thing is just about making it affordable. So these interest rates could be 10%, for people buying mortgages, as long as the government and the banks figure out a way to make it affordable for people, whether that extends the mortgages.
Well, it comes back to earnings. There's a limit. It can't keep going up forever. But
thanks for watching. Want to know more? Join our Property Cycle Investor newsletter. You'll get exclusive access to our new uploads on YouTube. Watch the next part here. Click here to watch our other videos.